Welcome to Trading Lounge and the US indices for Wednesday, February 9th, and starting with the weekly chart here. As you know, we're looking at wave 4 low here, and we're also, you can see that we've got quite nice volume on this low bar here. A little bit tricky to see here, but see it a little bit better on this charting program. So we've got that nice volume here. This had been sold, half of this bar is is to the upside and half is to the downside. So yeah, and this volume bar here, obviously it's only just sort of during the week here, but we'd like to see that push higher. But when we're looking at wave 1 in a market, quite often the volume is like this. The low will come in and the rest of the volume will be quite low until we get into the third wave. So the third wave will be this one here. So we're still in wave 1 here. Let's go to the daily chart and just get some perspective on this. So no change in the analysis. Well, there is a slight change down here, I think, so it's sort of worth talking about a little bit. So we only want that wave 3 there. So from wave 4 here, we're looking up for wave 1 here, and we're using Apple as a bit of a template for this, and then wave 2 pullback. So we've got 1 and 2 and 3 and 4 and 5 here. The NASDAQ's a little bit different, where we've got 1 and 2 and 1 and 2, and some of the other indices are completely different as well. With the Russell, we're looking at wave 1 being up here. The Dow Jones is also looking a bit sort of weak at that particular point as well. We'll also just have a look at our other alternative counts, because wave 4s can get rather complicated in that all of this could simply be, a much larger triangle pattern occurring through here as well. We could also extend the WXY, making this the W and an X up here and a Y. I don't think any of that is the case because of what I'm seeing in stock, but taking this count further to the intraday and getting a better understanding of that is simply 1 and 2 and 3 and 4 and 5. Now the only change I can think we could make was put wave 4 over here, and I've got reasonably good grounds to do that, so it's a bit of Arthur Martha at this stage, but that will unwind itself. But in a nutshell, we're looking for wave 5 to the upside to make wave 1. The trade that we're really looking for is building in on this wave 2 here into wave 3 here. So it's, it can be a little bit tricky, because between wave 2 and wave 3 there, we'll also be looking for 5 waves to the upside here, probably something like this, giving us the first high above. No, maybe not. Anyway, it doesn't really matter at that point. So building into the trade is going to take a little bit of thought, because this wave 2 here can pull back 61.8%, and then also within this structure here, there's also going to be 5 waves in this structure, and this wave 1 here can pull back. Well, they could, the 62% they pull back to is just the sort of starting point. Sometimes they really hit on that, and it makes everything sort of very mystical and everything else, but in reality, it can pull back 40%, it can pull back 80%. In fact, it can pull back to one point within, the low here. So what I'm trying to say here is building into this third wave is not as easy as one would think. So perhaps don't use leverage unless you're using options, not CFDs. So if you're trading stock, the idea is just to build in small positions, and we'll try and get those tiny little positions to break even each time, and we'll be aware of the bigger pullbacks within the structure as well. Alrighty, but we'll get to that when we get to that. But I do want you to give some thought about how you can get from here to here in one piece, and bank a bucket load of dollars on that. So yeah, we're trading this up here, so that's okay. We're looking for entry points. They're sort of being triggered now, I guess, but let's go in and let's have a look at some alternative counts. So just on the 2-hour chart here, this would be a larger WXY pattern here, so a W all the way down here for the low of a W, and then an A and a B and a C wave coming up here for the X and down for the Y here. We could also look at a triangle pattern as well, so we could do that on the hourly chart here. There's good cause for that as well. Well, all of that becomes the A wave. We don't need that up there for that. So the A, the B, the C, the D, and the E. It's possible, you know, we'll just keep an eye on it, but I don't think it's the case, as I said, because I'm seeing stock leading the way with an impulse wave to the upside. The indices, some are following well, some are not. Yeah. Anyway, let's go back to the 4-hour just for one moment. So what we're going to do now is go to the tick chart, the 100 tick, and pick it up from this wave 4 here. So looking at it as blue wave 1, 2, 3, 4, and 5 here for that, and then we're pulling back for wave 2 here. So with this in here, it's just that this move here is just really not doing it for me. You know, it's just giving me an impulse wave here, a correction, and then 5 waves in this move here. So it really counts as a B wave to this point. So I'm thinking that we need to be doing something like this. So an A wave here, B wave here, and a C wave over here, which we could probably put a WXY. But anyway, the main point is that it's difficult for me to look at this as wave 1 over here for this. So we looked about going long here. That was up here was our first one, then down to here, then down to this one here, so onto this one, and then down to here. So we can look at that there. Hopefully you're smart enough to see 5 waves in this little move here, and then an ABC pullback into here, and then build in long at this point. So that would be good if you've done that. But if not, that's okay. The main point here is that we're really looking for 5 is the second strongest number. The 4 doesn't mean diddly squat in this case. It's all about the 500 becoming the support and finishing the correction off over here. So that's what we're looking at now. So we'll start looking at this as the next move to the upside here for this. So we'll look at 3, 4, and 5. So how far we get up here, we should take the top out here, and we can look at this. I mean, I can readjust everything, but I'm just thinking that we need to look at this as 1 in here, and whoops a daisy, that moved a bit quick. 2 here, and 3, 4, and 5. That should play out within group 2 there, and then wave 5 to the upside. So yeah, and like I said, it's you know, we can play around with this, but really once we get to here, we'll be looking for, you know, this wave 2 is supposed to pull back 61.8%, but you know, this is a lot of support that we've gathered in here now, so it'll just pull back to here, and then we'll head up this way, and that's where we'll start to build in on all of this. So as I mentioned to you, do not lose money in this wave 4, so I hope that's been the case. And if you do trade, you know, structures of this degree, which are okay to trade, but better to just halve your position sizes to start. You know, you need to do, you know, when you're winning, you know, when you're in a trend like this and you're winning, sure, stack it up, you know, you can leverage out a little bit, but you don't do that in wave 4s. You have to change. The market's changing all the time. You need to change with it. Otherwise you're just going to get chopped up. So we don't really need that there now, and we don't need that. So this is also a little 5-wave structure up here, so we can also look at that in terms of start counting that. I'll try to get this video out reasonably quick, but you should be able, you know, if you've been around the block with me, you know that you'll be seeing this, and you'll be above the level. You'll be talking about group 1, or you'll be thinking about it, and that's all there. So the idea is to scale in through all of this. So we can also look to build on top of the 4530 and also the 4550 here as well. They're the moves that we're looking for. You can just shorten that up here somewhere. I mean, I could pull it down a lot closer, but just taking that wave 1 out is fine at that point. So end of session, so we'll get a little bit messy and all the rest of it, but that's sort of where we are at this point. I mean, the safe trade is taking this top out here. That's the safe trade, because if that, can that be counted as 5 waves down here? Possibly, but then that would have to be used as an ABC to the upside. 1, 2, possibly 3, 4, 5, an A and B and a C. Yeah, possibly. The safe trade is taking that top out because there is a count that can move down from this point, which I'll show you on the NASDAQ. So unless that top is taken out, then it's possible for the market to move down. But look, generally that's the pattern that we've been looking at and we'll stick to. So that's all good at this point with all of that. Let's have a look at the NASDAQ on that note. So the NASDAQ, I've just got it on the tick chart here. I don't need to go into the bigger picture, it's the same. But the thing here is we've got overlapping wave structures here. So we need to look at this as wave 1 and 2, and then 1 and 2 here. But in this is where we had 2 before, but I've put 2 over here. And yeah, same thing again here as well. Taking this top out here would be the safe trade, but if you want to go for that point, that's okay there as well, and we can look at that there. But while that top's in place, we could look at the situation of another pattern here. So this pattern is just a little bit different. I've got 2 patterns going here. So in this pattern, we're looking all the way down for the A wave here, and then an A and a B and a C wave for the A wave, an A here, and then this one here is in 3 waves. So that's the trick. Nice 5 waves here, then a correction, then 1, 2, 3, 4, 5. So I can look at it as an A wave here, B wave here, and a C wave here, and that's why I mentioned that that top really needs to be taken out on the S&P and this one as well. Once that's taken out, then that's okay. But at the moment, it could be the A wave here, an A, B, C for the B wave, and then down for the C wave to make a B wave here, and then go up for a C wave. I know this is really complicated, but I don't mean to, make it complicated for you, but I do need to point it out. So that top needs to be taken out clearly, and then that way we're proven to go to the upside. This market's all about the 15,000 here, and if there was going to be a triangle pattern here, as an A, B, C, D, and E here as wave 4, then it will play out across that 15. If we look at a different pattern with a W here and an X here, then we're going to come down lower here as a Y pattern here. That would be the play in that regard. So we'll see how we go. Like I said, the reason that I'm pushing to the upside with an impulse wave is because of what I'm seeing in stock. And stocks like Facebook Meta, they're the ones that are, sort of destroying the NASDAQ count a bit. But I'm going with the main crew, so that's the Apple, the Google, the Amazon, those guys, and this is why this particular pattern is looking so bent. But taking that on board, yeah, okay. So with the Russell here, this is just the weekly chart. So stochastics has given us a nice sort of situation down here now. We're looking at wave 1, 2, 3, 4, and 5. Wave 4 is rather small. It could get more complicated, but we need to move in on the long side here for this. So we'll be looking for a move up to probably move up to there, but let's just next level up here is 2.5. Close enough. 2,500, which is the medium level. Medium levels are always halfway between 2 major levels, so I could, oops daisy, I could put could also put it between these 2 here as well, and it's just basically breaking down a problem here. So that it would have helped us with this setup, because we had the arrival, the reaction, the first high above the level. We could have been long at that point. That's basically it. The other levels we're looking at coming up here will be 2.8, which is probably, and then here we're looking at group 1, which is 1, 2, and 3. I won't put them in here. We can look at the target to the upside in terms of extensions and so on. But look, I always find I always like to use the last wave and things. The 161 also takes us to 2.8, but we know 8's the profit-taking number. We know it's going to get hit there. And look, it's okay to do those sorts of things, but at the end of the day, we have to count the structure. That's the only accurate way to do it. The other way is a bit of a guessing game. and Fibonacci used as time is also a bit of a guessing game as well. It really hasn't been cracked. Fibonacci as a price ratio that I use it as, and as a retracement and extensions, much more accurate and better than using it in time. But sometimes it works in time, and and it's like an amazing, and you have a spiritual experience or whatever, and then you go to use it again, and there's no answer. So let's go to a daily chart and check on this. So we're looking for, called the low in, we're looking at this as wave 1 and wave 2 here, and then we're looking for wave 3. So counted a little bit differently. Let's go to the tick chart and drill in a bit further. So from wave 4 here, we've looked at this as wave 1 with an A and a B and a C for wave 2. Bit of a journey. It's different from the other markets. And then looking at this here as, impulsing to the upside. So we've got wave 1 and 2 and 3 and 4 and 5 for 1 and 2 here, then 1 and 2, and we're continuing to build up through there. So we're long here with the stop here. We've got support on top of group 1 here now, so we can move the stop up. I'm going to move it just under here just for a moment. And then the other place to add next is, could have done a better job on adding here as well, but wasn't there. Should have been down to that low and then to that low and then down to that little low on the top there, but we'll leave it there. Doesn't really matter. But what we're going to do is build on, we're looking for a classic trading levels pattern on the 250 there, on 2,500, sorry. So it'll look like this. We'll hit the 50, the midpoint, and the market will react, and then the first high above the level, yada yada yada, and then we'll be going. We can go along over here again if you wanted to add to that. You could also exit if you're looking for an exit point here. You go at the 50. If you wanted to go before that, so between 40 and 50, you would have the numbers running 41, 42, 43, 45, and 48. So 48 is where you would take profit at if you wanted to get out early, so to speak, or take part profit. So anyway, that's where we're up for that. But the thing here is that we're building in here because when we look at the daily chart for a moment, just to gain a bit of perspective on the size of the trend, is that we should be taking the top out here. All right. So our journey for this, be it ETFs or whatever you're looking for, is really we're going up to, well, as I mentioned before, we'll be up at 2.8. But yeah, so we'll take some money off the table here, we'll look at it and so on and so on. We need to get top of group 1 here. It's going to be a rough journey getting through this and this, but if you get small positions, so like we've got 2 or 3 positions in here now, so we'll just keep continuing to build them. We could end up with 20, 40 positions in here. But the thing is that we're getting each one of those to, we try to halve the risk first, then to break even, and then add another one, and you keep building in that regard. So yeah, it's a bit of a technique, and it's also a technical technique of where to put the stop and where to enter as well, and how to protect your exposure and so on and so on. But anyway, that's the lesson and the journey that we're about to take. And maybe I've got it all wrong. It's not always you get everything sort of right, but let's have a go. Alrighty, thanks for tuning in. Cheers.